Thank you for joining me. We are on the eve of our final lesson, our final video. So tonight we are going to be talking about month-end close. This is another extremely important lesson. This is one of the final steps for your bookkeeping. So as always, I ask that you all enable StreamYard because enabling StreamYard enables me to be able to see your comments, or better yet, to see who is commenting. Otherwise, it comes up as anonymous. So please just go to the three little dots on the bottom right-hand corner of the video and click on Enable StreamYard. And again, I always let everybody know why it is that I do this before we get started. So we have two reasons why we do this. And the first reason is to help out small business owners that may have been affected by COVID. And they may not be able to afford a bookkeeper. So just because you cannot afford a bookkeeper does not mean that your finances or your financials should be lacking. So this is just a very, very basic. All of these lessons are just very, very basic, and we touch base on everything. And the hope is that if you have questions and you want to learn more about uh, what you need to do to get a handle on your financials without a bookkeeper, that you will actually come to me and I can walk you through some things. So just because you don't have a bookkeeper and you think that you have a handle on your financials, but you're doing it by way of looking at your checking account every day, that is a horrible way. I'm sorry, I'm going to be very blunt about it. That is a horrible, horrible way to keep track of your financials. It doesn't work. I guarantee it. You will end up in a bind. You will end up in the negative because of it. So you want to make sure that you are good on knowing exactly how much you have spent and how much you have made in order to ensure that you are making a profit. Because once COVID is over and things really get busy for you again and you can start hiring people, then chances are you're probably going to be looking to expand here in the next year or two. And that requires a business loan, and they will not give you a business loan without financials. Giving them a printout of your bank statement, that won't cut it. So the other reason is I help brand new bookkeepers and new-ish bookkeepers gain confidence in their new skills and hone those in and uh, give them more knowledge because many of them, due to COVID, have entered into online programs, and many of them promise them the world and they don't deliver. So a lot of them have been failed. So I want to ensure for them and for their clients that they know what they're doing and that they know uh, how to properly take care of their clients, how to gain clients, and how to do their own bookkeeping and be able to make it in this bookkeeping world, so in this industry. So again, today we are talking about month end close. We always do a review, and what that review is we covered two lessons yesterday, and I'm just going to talk briefly about this. The first thing was, should you be charging sales tax? Obviously, I cannot tell you whether or not you should be charging sales tax because every single state is different. I gave the two scenarios of California and Texas because those are the two states that I've lived in. and that I know the best. And I'll tell you that one state may not require any service-based business to charge sales tax whatsoever. Another state may require some service-based businesses like restaurants to charge sales tax, while others don't. And there's a whole laundry list of scenarios. California happens to be kind of a mixture, whereas service-based service-based businesses do not charge sales tax at all unless they're a restaurant. Restaurants, they do. They don't charge sales tax on food, but they do on the service. All other services are tax free. Here in Texas, they have a list of business or sorry industries that charge sales tax and others that don't. So obviously, any product-based business does, regardless. And service-based businesses, you have to check. You have to look for your industry on the state website in order to find out if it what list it falls under. So for myself, I do not charge sales tax. I don't have to pay sales tax, thankfully, and I'm one of very few that doesn't. But uh, I do have to charge and pay sales tax on any reimbursable expenses. So, in other words, for my QuickBooks subscriptions that I have to pay for my clients up front and then get paid back for it, that I have to charge sales tax. And there is a workaround around that in order to ensure that sales tax can be avoided. But you need to do your own research. You need to go to your state website and you need to do the grunt work as far as looking for the answers because I cannot give those to you. I can only give you some examples. The other thing that we spoke about is classes. What are they and how are they used? And excuse me, and what classes are, again, briefly, is it is another way of reporting. So it's kind of like a help to the chart of accounts or a help to the reports. It kind of toggles in between. And what I mean is you have your chart of accounts and you want to keep those as clean as possible so that nothing gets convoluted or lost. But then if you have, let's just say, if you have a church and you have all of these different ministries and uh, let's say you've got 10 different ministries and you're holding 3 or 4 different fundraisers all in the same month for different industries. You have to have a way to keep track of those fundraisers. And you don't necessarily want to have to put those in the chart of accounts because every single time you add a new fundraiser, you don't want to just keep on adding that to the chart of accounts. You create a class. And what that class will be the name of the fundraiser. And now every single purchase that you make in order to set up this fundraiser, you get to put that in the class. Every single donation that you receive that is for that fundraiser specifically, you get to put in that class. So now you get to run a specific report that you base off of class. And now it's very simple, it's clean, and you know exactly how much money was netted in the donations. So now if you have to, let's just say it's a Mexico trip. Now you know exactly how much money you have in order to offer up as a scholarship for kids that may not be able to afford the trip but really want to go, and as well as the flight or the bus, food, hotel, um, any amenities at all when you're there in Mexico, whether you are building homes or you are uh, preaching to others, whatever it is that you're doing, whatever your mission is, you want to make sure that you have enough money in order to pay for all of that. And the classes are the best way to do that. Okay, so let me share my screen. We've actually got slides again tonight. So my meat and potatoes, as I like to call it, we're talking about month end. So what is month end? Month end is the closing of all of your processes, which usually occurs on the last day of a calendar month. The month end being closed will remain open for up to 7 additional business days, not calendar days, business days, in the next preceding month in order to process all prior month transactions. So I've had people ask me, how soon can I get financial reports after the first? They hope that they can get financials the very first day of the following month, and that is not the case. It takes time. It takes about a week to close out a month. And we'll get into closing on the next slide, what the different stages are and what you have to do, or in the next couple of slides. And please don't think that if you have a bookkeeper either on staff or if you do have a bookkeeper that you've contracted out to, or the bookkeepers that I'm speaking to, please don't think that if the bookkeeper cannot get it done within the first 2 days, please don't think that they are incompetent or you as the bookkeeper is incompetent, because that is not the case. There is not a single bookkeeper on the face of this planet that can close a month in a matter of 1 to 2 business days. It is impossible. So it takes a week at the most, typically a week, business days, 7 business days. Um, You can possibly get a month closed in about 5 business days, depending on how much there is. For the church that I worked for, oh my goodness, the amount of closing that had to be done. I'll tell you, I had a task list that I had created for all of my processes, and it was 2 pages long. That was how long my my closing was for every single month. And you always know that you cannot take any time off whatsoever between typically the first and usually the between the 8th and the 10th, because it's going to be impossible for you. If you work for a nonprofit or if you have a nonprofit, those reports are detrimental to your organization. So you always want to make sure that you stay on budget. So why is month end an important process? It's important to perform month-end closing in every organization, as this enables the bookkeeper or accountant to generate accurate and consistent financial statements. It also helps in early identification of any accounting and bank-related issues rather than at year end. I'll tell you that when someone comes to me generally and says, "Here, I've got this giant box full of bank statements and receipts for the entire year. Please enter them now. I'm not going to have anything to do with you for the rest of the year. I don't want you to maintain my books. I just want you to enter all of this stuff, and I want it done next week." I'm sorry, but no, not going to do it. Can't be done. It cannot be done in 1 week. In order to do something like that, it's going to take a minimum of a month. And I'm going to charge you out the butt for it. I am a very blunt person, I'm sorry. But yeah, I'm going to charge you a lot of money for that. I mean, I typically charge $75 an hour if I'm charging on an hourly rate, which I usually do not. Um, but if I'm gonna be doing something like that for you, I guarantee you I'm gonna charge you at least $100 an hour to do it. So, and you can figure it's gonna take me 30 days at least. So, so yeah, please don't ever do that because I guarantee you, you will get a lot of bookkeepers turning you down, and probably a lot of bookkeepers cussing you out. So it's just like going to H&R Block or something with your shoebox full of receipts and asking them to do all of your taxes with that. They hate you for it. So, um, yeah. So, what is the month end close process? There are a lot of steps, and depending on your industry and how big you are, will depend on your process. It will depend on how long it takes you and just how many steps you're going to have. The steps I have here may not be nearly enough for your business. You may have some pretty extensive financials like investments, which I've already said, if you have investments and you have something that is really complicated, I do not recommend that you do your own bookkeeping. I recommend that you either hire on a bookkeeper, whether it's employee based or contract based, or you have a CPA. You should not be doing it yourself. So, what is the process? Number one is always continued collection of data. You're going to continue to collect all of your invoices that come in, all of the bills. You're going to continue to collect payroll reports. If you have any credit card receipts and statements, loan documents, so your loan statements. So you're going to continue to get all of these. If you have someone that's being reimbursed and they give you receipts, you're going to be collecting all of those. Step two is that you enter all remaining transactions for the current month. At this point in the game, you are going to ignore everything that comes in for the following month, and you are only going to concentrate on what you have for the month that you are currently in, because that's what's most important at that moment. You're going to ensure that all payroll has been processed and current, because you want to ensure that every single check that you have processed for each employee is in the system. Every single journal entry, your payroll taxes, everything is in there. You want to make sure that all loans are up to date and the interest has been allocated. So, again, when you are paying your loans, unless you have a 0% loan, which is not likely, you need to allocate everything from principal and interest. So you want to make sure that that is divided correctly. The next step is that you will reconcile all bank, loan, and credit card accounts. And we're going to get into that tomorrow, our final lesson. Um, Next is you update all prepaid expenses and depreciation. If you are on a cash basis only, which is usually a nonprofit, you do not have prepaid expenses. You shouldn't even have credit cards. Not to say that you can't have credit cards, but you shouldn't have a credit card on the books. It should just be entered as expenses. Depreciation, that you can take depreciation, but if you're a nonprofit, chances are you're not filing taxes, so it's not going to matter. Um, the next step is to review your financial reports for accuracy and consistency. You're going to go through it with a fine tooth comb. And if anything at all stands out that doesn't look right, you're going to drill down into it and you're going to figure out why it's there and what needs to be done to correct it. And then the final step is to make any adjustments and corrections to the financials. The best way is to look at a trial balance, but for you, chances are you're not going to have that ability because the normal QuickBooks Online subscriptions do not offer a trial balance. That is typically just for the accountant or the bookkeeper. Um, but you can look for it at depending on your subscription, you might actually have it. So take a look at the trial balance and make sure that everything balances as far as the ending balances. You want to make sure that they're the same for the debits and credits. Um, However, your best way is to take a look at your P&L, your profit and loss, also known as the income statement. Take a look at that, and you want to look at every single line item and figure out, does that belong? Why does my office supply expenses, why are they so high? Last month I only spent $500 for the entire month on office supplies, but this month I'm showing $3,500. Why is that? And so you drill down into it and find out, did I put something in here by accident? Um, you want to do that with every single thing. For your balance sheet, you want to ensure that unless it is an owner's draw, nothing should be negative. Everything should be positive. And I certainly hope that your bank accounts on your balance sheet are also on the positive. Um, so these are the things that you need to look for. And if anything looks out of the ordinary, you need to look at it, do your research, and change it if you need to. And why should this be a part of your process? Your vendors want to be paid before the end of the month, just like you do. They don't want to wait 10, 15, 20 days after the end of the month to get paid. They're trying to do their month end close as well. Everyone is in the same boat. In order to get accurate financials, everything must be entered for the entire month, not just part. And if specifically, if you're a nonprofit, if you have paid two bills for the same vendor on the same day, let's just say you didn't pay your bill last month, so you decided to pay them both at the same time, then you're going to have to do some allocations because as a nonprofit, you need to make sure that everything is allocated correctly per month. And so what you have to do is, and I know this is kind of above your head, but for us as bookkeepers, what we need to do is we need to back out. We need to put in that payment as of the day that it was paid. But then we need to do a reversing journal entry, an adjusting journal entry to back it out of that month. And then we need to put it in the previous month. So it still shows that it's there as the transaction actually happened, but you're actually applying it to a different date. You need to ensure that, okay, we just went over that. Everything is in your financials for the correct month. You don't want to wait until the end of the year to enter everything all at once. We already went over that. And this is the best way to help you stay on budget. So if you do work with a budget and you're trying to stay strict to it, then this is the way you're going to do it. Where there are reports in QuickBooks where you can actually pull the report and show a budget alongside the actuals. So that way you always know if you have fluctuated a little bit with one of your accounts, one of your categories, let's just take office supplies again, then you're going to see that fluctuation and know that you need to tone it down for the next month, or maybe you didn't spend as much on office supplies this month, so maybe you've got a little bit more money to spend next month if you need it. Um, so that is the basic close. That's the basic close for every single month. Of course, you can take that on a grander scale and we start looking at year-end close. And thankfully, if you are current on all of your month-end closes, then there's not as much work. Uh, but even so, the year-end close is pretty extensive, and it's always best to use a CPA for a month-end close because, or sorry, your year-end close, because closing the year means making sure everything matches to your taxes that you have filed. And what will happen is if you use a CPA, the CPA will file your taxes and then they will give you or send you an email. They'll give you a piece of paper that actually has all of these journal entries or one very large journal entry and say, okay, this needs to be entered and it has to be as of this date with these descriptions because everything needs to match exactly to your taxes from the previous year. Now, when you're going into the following year, another journal entry will have to be done by your bookkeeper in order to make everything current. Because when a CPA is doing your year-end journal entries, he or she is matching everything to a spreadsheet or a schedule that they have. So let's say your loan statement, your credit card statement, what they're doing is they're allocating the interest per an amortization schedule. And what that does is that amortization schedule is telling them how much interest you should be paying every single month and the exact date that your loan should be paid off by. If the interest is paid on that date every single month, it's unrealistic. Why? Because nobody makes their payments on the date that they're due every single month. Nobody. You've got payments that are paid early, payments that are paid late, payments that are paid on time. Uh, Many people will take their loans, they'll make their normal monthly payment and then they'll add an additional payment for principal only in order to pay their loan down faster. So that amortization schedule, in my opinion, is useless. But the CPA has to make sure that for your taxes, it matches to that schedule. But then once you put that in, put that journal entry into your books, next thing you know is you are no longer current with that loan because it's based off of this amortization schedule. So now we've got to do another journal entry in order to update everything to ensure that your loan is now current again. So it's a lengthy process. It can be quite daunting for some people, and trust me, the very first time I closed out a year by myself and had to create the journal entries, that that was a nail biter. So but it can be done. So anyway, join me tomorrow at 7 p.m. Central Standard Time. Uh, we will be talking about bank reconciliations and reconciliation entries or errors. Um, Let me actually get the actual title for you: reconciliations and reconciliation discrepancies. So we'll be going over that. I will tell you that anyone that joins me live and actually remains live at the end of the video and they participate. That's the thing. They must participate and stay for the length of the video. Then there will be a special gift. So I will be doing a giveaway because this will be the final lesson, the final live video series. So I know that there will be other videos, possible other uh, different series coming up. But for right now, this is the end. Tomorrow is the end. And so I would like to celebrate that. And I would like to pass that celebration on to a lucky winner. So tune in at 7 p.m. Central Standard Time tomorrow when we'll talk about reconciliations and reconciliation discrepancies. And there will be a free gift waiting for some lucky winner as long as they participate and they stay for the entire live video. So I hope to see you tomorrow. And I hope that there will be someone on here that actually gets to win this. Otherwise, I guess I'll be the winner. So um, so I hope to see you tomorrow evening. Thank you. Good night.